as I say, and you know, there's so much bad news in commercial real estate. Put it in a larger perspective, exactly where we are at this point. What are you seeing in your business, particularly in terms of occupancy rates? Are people really coming to the office yet?
Yeah. Well, David, nice to be with you. I would say in summary that the sentiment is worse than the reality that we're experiencing. So let's talk a little bit about usage of buildings. There's a steady stream of corporate announcements going on right now of companies returning to the office like Amazon did on May 1st, companies that were in the office 3 days a week moving to 4 days, even some companies saying we're going to evaluate all you employees based on your office attendance at year end. So you're seeing more and more of this. I think CEOs all want more in-person work. They recognize that remote work is like a benefit. It's like compensation. You have to meet the market, but it comes with a real cost of productivity and culture.
Are you seeing in your buildings, though, and actually people showing up? Because we have things like Castle Card reporting, it's still like 50% in Manhattan. Are you seeing it move up?
So the building, we don't use Castle systems, and a lot of the landlords that we compete with don't. So I know the industry uses their data, but so I'll tell you what we're experiencing. So in New York and Boston, Tuesday, Wednesday, Thursday is more or less at pre-pandemic attendance. I think Monday's about 60% of that peak, and Friday's probably less than 30% of that peak. The West Coast markets where we operate, Seattle, San Francisco, and LA, they're probably 50% of all those numbers, so well behind.
What about repurposing some of these office buildings? Because we've heard a lot about that, and whether for residential or, I think you've been big in life sciences actually, haven't you, at DXP?
Yes.
How is that going? Is there too much of a move into life sciences? Are you seeing a glut?
Yeah. Well, let me talk about the repurposing. We definitely have repurposed several office buildings successfully into life science, and we've done it very carefully in some of the premier life science markets in the country. But on the residential conversions, which you asked about, this is something that theoretically makes a tremendous amount of sense. We need more housing in our cities. We need less obsolescent office buildings. We need more real estate tax revenues. We need more activity on the street. And when you repurpose an asset, the carbon footprint of doing that is much lower than demolishing and reconstructing. However, there are obstacles to doing all these things: regulatory, zoning requirements, residential zoning versus commercial zoning, physical requirements. The building has to be empty. The depth of the buildings. Residential needs more light and air than office, and many office buildings have deep floor plates. And then financial. To do a successful conversion, the office building has to be contributed at something pretty close to land value. So it makes a tremendous amount of sense. There are a lot of obstacles, but I would think about it this way, David. There are 400 million square feet of office space in New York. If 1 to 2% was converted, that's 4 to 8 million square feet of new housing, and it's also probably 5 to 10% of the vacant office buildings. So not a lot as a percent has to happen for it to be meaningful.
You raised the geography question because you particularly are obviously in Boston, but also New York, San Francisco. Some of the cities have been hit a little harder when it comes to office space. Are you thinking about going to other places? We hear a lot about Austin, we hear about Miami, we hear about Florida. Are you thinking about expanding into other geographic areas?
Yeah. Well, we're very happy with our footprint. We believe in having real estate where there are barriers to new supply and also knowledge clusters of workers, and we think our cities have those. There's clearly been some migration to the Sun Belt, and there's been strong growth in the Sun Belt markets, but there's also been a lot of development. If you look at the vacancy rates in many of the Sun Belt cities, they've gone up very significantly over the last year to 18 months, and in many cases are above the vacancy rates in the cities where we operate.
Oh, and you're in a particular position, which is a publicly traded company, the largest publicly traded company when it comes to high-end office buildings, which means you have a lot of resources, access to a lot of resources. On the other hand, there's a mark-to-market every single day, in a sense, that's affected your stock like everybody else's. As you look at it right now, do you see opportunities? I mean, are there bargains out there? Because, in fact, there are problems getting financing. The prices are coming down.
Yeah. I think there are. So for example, we launched at the end of last year $1.5 billion of life science development in East Cambridge. We're building a 600,000+ square foot lab building for AstraZeneca at attractive yields to our shareholders. We're also converting another significant office building in East Cambridge to life science for the Broad Institute, also at attractive yields. So those are the types of things that we've been investing in. But I think as this market evolves and there's more pricing discovery and a reset, I do think it will create great opportunities for a well-capitalized player like BXP.